Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray DeNiro, and we are back at it again for another Bag Talk episode. Today, we're going to be talking about finding deals during the Bitcoin bear market because at this point, we have to acknowledge what the numbers say. We are, quote unquote, in a bear market. Now, for those of us who are like myself that have been here for a while, I don't believe in bear markets because I'm buying all the time. I was buying at 126. I am even more excited to buy now. I am buying more now. I have curtailed my financial strategy as the price has declined. Even with the pivot to being fully invested, we are focusing on amplified Bitcoin exposure to catch that wave back up. I don't really acknowledge bear markets. I just look at them as better buying opportunities for me because I don't sell Bitcoin. I don't plan to sell my Bitcoin Treasury Foundation assets. Like, it's going to become a part of my primary income portfolio to help bolster my margin, and we will leverage borrow against, not sell. Might borrow to take profit to, buy some actual hard Bitcoin at certain points, but I'm not planning on selling out of any of my treasury positions. With that said, this episode, we are going to be covering how I'm looking at my long-term holdings at this point, because I am fully active over in my traditional finance, my brokerage. You guys will be seeing updates. There will be updates because we're making some massive pivots. We're going to revisit what my strategy is as this Bitcoin dip is taking place, because people are constantly asking me, are you still buying? Are you still doing this? So we're going to go over that too. But the focus point of this episode is to give as much value as I can about the Bitcoin treasuries I'm currently looking at, and also the well, there it is. Okay. And also the strategy that I'm going about how I am repositioning and purchasing into those stocks. And we will put you last. And then I got one more to pull up. Hold on, one more. Okay. So then I got my cheat sheet. Okay. So before we get into the episode, hopefully you guys are tapped in. You got to see me sneeze. I do these one take. I don't edit or do any of that stuff because I don't live here currently. So I'm not online all the time. So I'm just leaving the information. You guys do what you do with it. Those of you who tap in, I appreciate you. Those of you who will be tapping in the future to see how I got so lucky, this is your Ray doesn't have time to actually talk to you now because you didn't want to listen when the opportunity was in front of you and he was talking about it all the time. So this is how I got lucky. We're going to start off with Bitcoin. And I'm going to go ahead and pull this to the screen. I don't have to be Micro Machine for this. For those of you who are watching, you'll be able to see it. For those of you who are not, you'll be able to hear me talk about it. So what we've got on the screen right now, for those of you who aren't looking, shout out to CoinGecko. We are always on CoinGecko, especially for our crypto portfolio updates. That's how I track my crypto, but also an easy place to go to get information on cryptos that you're interested in. In this case, we are talking about Bitcoin. Now, as of this recording, the price is at $67,847.84. We are bouncing basically between $60,000 and $70,000 right now. I did an episode, we got to get past 72 to start jumping up. We've got to hold that line. We've got to reclaim that line. And, we bounced down to 60. People are like, oh, we could go below 60. Are you scared? You hold a lot of Bitcoin. You have a whole Bitcoin. Are you still sitting on that? Yes. Never touching it. Just so you know, I'm never planning on touching it. That is I consider that a fully funded retirement. Like, I'm not worried about that for about 20 years. What we are doing now is actively trying to replace our W-2 income, and we're still buying Bitcoin because now we have the ability to leverage it again at higher rates, but again, and it's better than using credit cards. So we're trying to get that set up so that way I can start getting my own internal combustion engine within my financial structure so that I can perpetually fund and produce income and continue to buy Bitcoin and continue to fund and produce more income. And very similar to what Michael Saylor's doing, except for at, the everyday layman's rates. So Bitcoin's at 67,000. We're down in the dumps. People are saying that Bitcoin is over. Obviously, Bitcoin at 67,000. Honestly, Bitcoin under 6 figures is just a present. So this is the base level. Like, if you weren't going to do anything else, if I wasn't going to do anything else, base foundation, this is a good accumulation range. We are in a great accumulation window, in my opinion, for Bitcoin. Could it go down? Absolutely. Could it also just start going back up? Absolutely. Could it go up a little bit and then go back down? Yes, absolutely. All those options are on the table. Those of you who like to define the tea leaves and try to make predictions and, do all of those things, I'll leave it to you, because no one ever times the absolute bottom, and we never know when the absolute top was. We bounced off 126. They're saying that was the peak for the last bull run, and I'm still holding strong to my opinion that if that's the end of the bull run and that's what our bull runs look like now, Bitcoin's still the best performing asset, but that was absolute garbage. That was a garbage bull run for Bitcoin for all the bull runs that I've been in. But we'll see, because I think the nature of our bull runs and our Bitcoin cycles are going to be different moving forward after that experience. So we'll see who's right. My money's where my mouth is. We are still buying spot Bitcoin and putting it into cold storage. At this point, we are also buying spot Bitcoin and putting it onto Strike to set up so that we can start, cranking our own flywheels around here, generating some income in and of ourselves. One of the key points about that is it is very important, and I tell people this all the time. The majority of my Bitcoin is in cold storage self-custody. I do not keep that much money on platforms. That is insanely crazy to me. Like, I have my brokerage account, and that'll be what it'll be. But even with my brokerage account, I am constantly funneling money whenever I tap into my margin to pay my bills at the end of the month. I take 10% of that and buy spot Bitcoin. Now, currently, we're working towards getting to that 20,000 over on Strike. We're in the fives. Right now, we're above 5,000. So we've got $15,000 more that's going to go over there first. But as soon as we do that, we're going right back to putting Bitcoin just straight into cold storage, because you shouldn't have more than you're willing to get caught up or lose on a platform. The whole premise of Bitcoin is that you can't be told what to do if they can't control your wealth, if your wealth is non-confiscatable. I will reiterate that and stress it. Like, yes, I do use the tools, but, the end game is always the end game. So that's Bitcoin. Now we're moving on to how we are amplifying our Bitcoin exposure. We're doing that via the treasuries, the Bitcoin treasury specifically. And I've got the 3 that I have. Well, actually, I guess the 4 that I have in my, that I have in my portfolio or will be having in my portfolio lined up here. And we're going to talk about them and how I am gauging when and what and how much to buy. So we're going to start off with Old Faithful. We're starting off with MicroStrategy, their Class A MSTR. At present, this is trading actually at a slight premium. Now, MSTR runs. We've seen it go up to $1,000. They did their split. It kind of bounced around, was in the 400s, and now we're down here because when Bitcoin goes down, this is a leveraged Bitcoin play, more or less. So when Bitcoin goes down, this goes down even more. This is a buy range for me. Now, am I dumping whole paychecks into it? No, I am not. What we are doing is every time we have our cash, our W-2 cash infusion, whenever I get paid, obviously being fully invested, all of that money hits my brokerage account. And then I disperse it from there and invest first. And then we use the income from the investments via our margin at this point, because we're keeping a margin balance. Or if we have all the bills paid up and we can run it cash, I do try to run it as flat as I possibly can. We pay all the bills and everything else second. I invest every dollar that comes in goes into investments at this point in some form or fashion. That's the way that I've flipped my finances. That's my upgrade for 2026. We're locked into it for a quarter, but I think that from the results that I'm getting, even though obviously we've had some large expenses come up towards the beginning of the year, and the debt has gone against us, we're getting it sorted out. And now that it's getting sorted out, obviously being in month 2, I'm like, yeah, I think this is just the way that I'm doing this for the rest of the time that I'm working. For the rest of the time that because I mean, in 17 months, I won't have to work. I will probably be working, definitely for sure. I'll be doing exactly what I'm doing until I figure out something to do, or depending on how things go within the company, if I'm able to finagle myself into a better situation that's more amicable for me and the lifestyle that I'm wanting, then I'll keep doing that. But that's part of the reason that we're building the Bitcoin pool up, so that way we can leverage the Bitcoin, because if I have that Bitcoin flywheel going, I can this makes it a self-propelling engine. So that way, if I just wanted to manage my portfolios, I could potentially just do that indefinitely. So that's what we're looking for. And I know that a lot of the stuff that I do seems, well, actually it is, from a traditional finance perspective, very high risk. But I come from the crypto space, which is actually higher risk than orders of magnitude higher risk than like what I'm currently doing. And, it's given me the foundation personally to where I believe, and all my money is involved in it, so I do believe in it quite a bit, that I can make this sustainable. I can build a sustainable portfolio. Now you have to spinning it up. You're running hot. After we get to some certain points, we're now starting to dial that back. You're starting to see a lot lower high yield, more diversified high yield in my portfolio. We're still keeping it around 100%, which is crazy. I get it for most of you. But for what I'm trying to do, that is what is required. And I do manage the portfolio. I'm doing a pretty decent job. It's not in a horrible state. And the debt is getting paid off, and we are being able to take these hits financially and keep moving forward while growing our way out of the debt. So that's what we're looking at. So MicroStrategy right now is not selling at a discount, even though Bitcoin is down, even though MicroStrategy is down. People are down bad. The people shorting, the bears, they're loving it right now, because this is the one point in time that they get to be right, even though they didn't make any money. That's crazy that people get on here and make these posts and talk their talk and beat their chest and, oh, I was right, but then they didn't make any money. If you were so sure that Bitcoin was going down, if you want to be taken seriously as a bear, why weren't those shorts placed at 126? You're all bears now, and you're about to place shorts now, And what's going to happen is we're probably going to go back up and you're going to lose money. But you'll talk trash about, oh, I told you at 126, but not a short was placed. Nobody is rich right now because they shorted Bitcoin. I've yet to see them with receipts. There's just a bunch of nondescript, non-face picture having people on X talking their talk, people on Facebook who want to post a picture of a stock and then they don't want to talk about stocks when stocks are down. You guys done disappeared. Or it's the, oh, I knew it was going down. Oh, I made $20. Like, you obviously didn't put in a short because you made $20. Like, we're down bad right now. But MicroStrategy is still it's a minuscule premium, but it's basically flat. So you're getting par. The reason I'm still buying is I want my 10 shares back. Also, I am long on MicroStrategy. Also, it's marginable, which means that, like, after we get to our 10 shares, I'm shooting that over back into the long-term holding portfolio or the income portfolio, because the Bitcoin treasury is going to be a part of my core plan and platform for being able to balance out my portfolio and have something in there that's just in there for margin. Obviously, it'll be a fluctuating margin, but for those of you who have been following me since I started using my margin, I don't use that much of it. I really don't. Like, I normally give myself an allocation that I'm comfortable with, which is 50% of what they'll give me in cash, which is generally about 25% of what they would give me to just keep it in the portfolio and use it to just buy stocks. So that's where I'm at with that. That's kind of where I'm sitting with things in regards to MicroStrategy. So we have our allocation that goes directly into Bitcoin, that as soon as I get paid, part of my paycheck now, about 10% of it, I get paid in Bitcoin, because thank goodness for Strike. They have a system set up in place to where you can, even if your employer doesn't want to pay you in Bitcoin, you can force them to via direct deposit. So like 10% of my check is going into Bitcoin no matter what anyway. The next thing that we're looking at is I have an escalating scale. So I have 10% of that money that goes into the income portfolio that also goes directly into our long-term holdings. Now, as Bitcoin has dropped, when we dropped below 80, I added another 10%. So that makes 20%. And then when we dropped below 70, I added another 10%. So like, while we've been in the $60,000 to $70,000 price range, 30% of my income has been going into these long-term holdings, and we're running it up like every 2 weeks, like clockwork, since we've been in this range. That's what it's been. And then whatever's left over goes into the income, and then we have the margin and the income, and that's where we're getting our ability to cover our bills, manage the debt, do all that stuff. We're in the process, currently in motion, of our hopefully last debt cycle. I think running through this year, towards the end of the year, we should be at a point to where we can knock out and get rid of some of this debt. Like, most of it should be gone. We also have another caveat of, once the income portfolio hits $60,000, we're going to do a sell-off, and we'll sell off and pay off whatever we haven't paid thus far. That's another opportunity that I have, because once the debt's cleared, if all the consumer debt's cleared, then all we have left is the SoFi loan to focus on, and then just paying expenses as they come, which really isn't going to be that much of a problem at the current income. The current ball and chain that I have is the consumer debt. Now, I wouldn't want to go all the way back to zero and start this over, because the opportunity cost would be too high for me. But by the time this is built up to 60,000, with me consistently chunking at the debt as I am, it's going to be probably about 20,000. I'd be willing to go from $60,000 to $40,000 because we're running our portfolio off $40,000 right now, and I'm sitting pretty comfortably. So I could take that amount of opportunity loss. I don't want to take going back to 10,000 and having to try to be fully invested off 10,000. It's not feasible for me with my current set of expenses to go back down that low right now, because we're sitting at about 40,000. The debt is sitting at around 30,000. So that would put me with about $10,000 left to keep in the market, plus the checks coming back in. But I also would not be able to, like, if all the debt was gone, now I'm probably not in a space to where I can run flat either. And my goal is, when the debt's paid off, to be able to more or less run my portfolio flat. So that means as the income comes in, I can just disseminate out of the income and be okay and live that way. And then whatever's left over, obviously you reinvest, or you got a little bit of pocket change, which I wouldn't need pocket change. I would just live out of the brokerage. It's way more economical to do that, to have every dollar working that comes in, except for what you need to pay bills. And then, whatever, if I'm working W-2 job still, all that goes in, whatever's left over, and you just live out of the brokerage. That's our goal. That's what we're moving towards. So in doing that, MicroStrategy is a key pivotal foundational piece. But right now I am not buying any more than what I have to. So as my income comes in, I'm getting my 1 share a week, sometimes 2 shares. But moving forward, after doing some research on this for this episode, I'm going back to just buying the 1 share, because like last paycheck, I bought 2 shares. This upcoming paycheck, we're going back down to just getting the 1 share and calling it good. And this is why. Up next, I'm going to get this one on the screen. We're going to look at Strive, ASST. Now, the thing with Strive is actually selling at a discount, and they have less debt than MicroStrategy. They're sitting in a better position than MicroStrategy currently is. And that is very interesting to me. That was one of the ones that I was looking at. They've done a reverse split to like boost up their stock share price, took some stock off the market. There's less circulating supply. They're currently trading at a 40 to 50% or 40 to 45% discount to the underlying Bitcoin that they're holding. Now, this is what I'm looking for when I'm shopping for deals. I want a deal. MicroStrategy, foundational piece. Like, that's the OG. You're going to make money off of it, but it's the slow mover in the race. It's the 500-pound gorilla. It just doesn't move or pivot as fast as these other companies. There's not as much upside. There's still a ton of upside, just not as much. And I like a little bit of spice in my life. I want more dip on my chip. That's an important, pivotal thing that is important. Getting some dip on your chip. The MNAV on ASST is sitting at about 0.58, which is awesome. Awesome. You're getting a 40 to 45% discount. And there's nothing better. The only thing better than buying Bitcoin is buying Bitcoin for less than what Bitcoin costs. And again, this is amplified Bitcoin exposure. So once Bitcoin starts running up, these will run up harder and faster. So I have been really loading the boat on ASST. Like, I went, and after the reverse split, I was down to like 25 shares. I am at 138 shares now, which I know, as far as in these YouTube streets, people like to throw you big numbers. They're buying thousands of shares, even though they don't show their brokerages. I do show my brokerage. So I give the actual receipts, and this is a journey from an actual person who puts on clothes and goes to work every day and isn't a content creator per se. This is my real money. So yeah, me getting to 138 shares in a short amount of time, that's a good grip of money. It's a good chunk of the money that's coming in. So that matters to me. I know it's not thousands of shares. I know it's not that big a deal. And the people who are posturing and don't give their receipts will for sure not they'll want to downplay. They're haters. Let's just call it what it is. Because I mean, if you're lying and you have to deal with somebody who's not lying, it's like, yo, I can show you the receipts. Like we can do the math on this. It just breeds a little bit of hate, you know. It just is what it is. So for me, that's where we're at. ASST is awesome. Like I said, I did the video. It was originally the poor man's MicroStrategy. It's no longer the poor man's MicroStrategy. The next company is the poor man's MicroStrategy. And I'm going to pat myself on the back real quick because I'm the only person talking about it. Nobody else is talking about it, which is crazy to me. The next company on the list is 21 Capital. 21 Capital. I'm the only one who's talking about them. Why does no one like 21 Capital? Why is everybody a 21 Capital hater? I mean, I know Jack Mallers talks a lot of trash. I know that he has his opinions and he has his perspective, and like I think it's just people don't like his perspective on stuff, so like they just like, we're not going to talk about it. But me personally, I got into this because I am a financial anarchist. I don't like middlemen. I don't like people telling me what I can and can't do with my money based on how I look, what they think about me, or any of those things that we talk about that systemically hold some people back while lifting other people up. That really only works if you have money anyway. So I am not 100% bought in on the rhetoric piece, but from the company piece, it is the third largest Bitcoin treasury, and no one's talking about how do you just skip over and omit the third place? That's wild to me. But 21 Capital is now the least expensive, and this is subjective, and the only reason is because my last one, you're buying an international stock, so there's a fee assessed to that, so like you have to do larger buys. So like for those of us who are getting a paycheck and you're getting like maybe 100, anywhere between 25 to $100, this is the least expensive stock that you can just dollar cost average a little bit at a time while not incurring an international stock purchase fee of $25 to $50. And so now 21 Capital is actually the poor man's MicroStrategy, like it or not. And I do like it because they're a little bit of a wild card in my portfolio, because they're going to be trying to provide value within the Bitcoin ecosystem to generate income to then buy more Bitcoin. Just makes sense. Oh, an actual business? You mean the business doesn't just buy Bitcoin? They actually do something. They actually provide value in the market. Oh, wow. Sounds like capitalism. So I am bought on for that part of it. And 21 Capital is at present giving, on top of it being the least expensive, it's trading at roughly a 25 to 30% discount to its underlying MNAV to its Bitcoin holdings. Now, the interesting thing about that, because 21 Capital is at like $6, which is awesome. I'm here for it. I normally buy a few shares with whatever's left over, but I think since we're dipping back down to just having one share of MicroStrategy being purchased with the cash infusion money, we're going to start putting a whole one of those 10% will go into 21 Capital. I think that's what we're going to be doing moving forward. And then last but not least, this is actually the least expensive, but the caveat is it is an international stock. So I think that the international fee is either $25 or $50, because I had Metaplanet in my portfolio, and then I sold it off and I got dinged for the fee on both of them. But like I needed some liquid capital, and I liquidated the long-term holdings. And yeah, that's basically the end of that story. It kind of it doesn't matter because the price point that I was at, like, I'm going to have a much better entry with these buys coming up as opposed to the ones that I had. But MetaPlanet, not MicroStrategy, MetaPlanet is selling at an extreme discount to its Bitcoin holdings because the underlying company posted a loss on the books. So like the hotel chain that they have, because apparently in Japan they do hotels and the markets are not good. They're decoupling and having to raise interest rates, and a bunch of carry trade questions are being asked and people aren't happy about it. They're not doing bad, but the market punished them in their market because of that reported loss. So now they're selling, the stock is trading at an extreme discount. It's the best discount to their underlying holdings, but there's also that fee. So for that position specifically, I'm waiting until I have $500 to $1,000 set aside to start that position back up, just because you have to pay the fee. So like, even if you're catching that exponential upside, you've got a hurdle of the fee that you have to pay also. So what we're doing with that is we're going to probably, as I get closer to my target holdings for ASST and XXI, because those are American companies, like we support the home team first. We support the home team first. Once I get to a point to where I can actually start focusing in on those holdings, or actually I might take a part of this money that I've got coming in that we're going to be doing for the debt cycle, because I take 10% for Bitcoin, and I might actually use a chunk of that money off of that draw to start my MetaPlanet position. We're going to do that. We're going to go a good grip. The majority of it's going into Bitcoin's direct. I think the other part, I'm going to go ahead and get that MetaPlanet position started. I think that's what we might do. Either that, or we'll take that and finish out our other positions, that chunk of money, and finish out the other positions and get those positions solidified. And then no, we're going to do the MetaPlanet play. That's what we're going to do. And that'll be what it is. Because that way, if anything goes south and I need to pay that back, hopefully MetaPlanet will be running during that time period, and we can sell that off before we have to sell the Bitcoin if things go bad. Because it's always a what if it doesn't work out? Because that's the mindset that people come from, and that's crazy. But yes, that's what we're going to be doing. But MetaPlanet has the best deal. It is currently trading at $2.04. And I think that's going to be one that hasn't, because it's selling at such a discount, but they're judging it based on how the company's income did. And so, also Bitcoin's down, so they got punished for that. They got punished for a bad earnings report. But I mean, I'm pretty sure most hotels in Japan, the earnings reports are probably pretty bad because the world's in a pretty bad spot. You either have money or you don't have money. So yeah, so that's what we've got so far. That's what we're looking at. That's where I'm at specifically. Like, that's where my focus is, on those 4 positions and Bitcoin right now. Like, we're trying to get as much as possible, because if this is bottoming, then I'm willing to catch this falling knife, because I can sustain buying like this, because the income portfolio is doing what it needs to do. W-2 checks are coming in every 2 weeks like they're supposed to. I have capital, and since I'm going fully invested, all I have to do is keep buying. So I'll buy this all the way down. And if we go below 60, I will deploy another 10% of my capital into these stocks. And I'll do it until the price turns around, because I've been through this 3 times before. The price turns around. This time, I got the assignment, and I'm positioned and I'm set up financially to carry it out. So that's what we're doing. We've also put Bitcoin exposure back in as I am going, well, I'm assuming we're close to or around the bottom. And so I've started incorporating Bitcoin exposure back into my income portfolio as well, because we're going to ride those waves up. We're making the necessary adjustments. And one of the things with high yield is you always have to have something else to cycle into. That's part of the game. So it's not just set and forget. Like, you have to be in and out of position sometimes. Like, if the position starts performing poorly, well, gotta go. Like, you gotta go. Fortunately, now, having learned that lesson, I'm getting better at getting into positions that if they're gonna perform poorly, you have to, and you go, okay, I'll buy this position now. There's a reason for it. So that's the reason I'm adding the Bitcoin exposure high yield ETFs back in, because I'm buying everything else Bitcoin through this market right now. Now, when it swings, we'll also be able to, cycle some of that out into less risky positions. We're already adding in less risky positions into the portfolio. So we're getting a really good balance. And more importantly, we're getting good performance. Like, the stuff that we're adding in, some of it obviously is volatile to the downside, but I also have positions that I'm total return up on now. Like, the portfolio is stabilizing. It's not having nightmarishly bad days because everything is one thing. But at this point, I'm willing to add in back a little bit more nightmarishness to it via the Bitcoin exposure, because this volatility I am willing to ride through at this point, because I've already made the decision. I'm like, we're loading the boat. I want Bitcoin in here. And it's the core of my net worth anyway. So I don't care that goes down, because I'm like, okay, cool. It's going to go down for a window of time. And if you just suck your teeth and keep buying, you come out on the other side of it pretty much all right. So that's what I'm looking at. Those are the companies that I'm looking at. I hope this adds some value. Obviously, do your own research, because this isn't financial advice. This is just me doing what I'm doing with my portfolio and my money, all of it. So, it's, you guys either get to watch a spectacular slow motion crash of my finances, or you get to see how somebody who is in a similar situation to you, that does things a little bit different, probably a little bit weird in comparison to how you're doing them, navigates these trying times and comes out on the other side, and see what happens. You can live vicariously through my results. This has been my episode of Bag Talk. We're going to leave it there. I will be back again next week. Don't forget, this is Future Financial Strategies. Until next week, it's your boy Reckless Ray Dinero, and I'm out.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.